Welcome to The Foundry, where leaders are forged daily. Each week we investigate themes of leadership, entrepreneurship, and mindset with some of the greatest minds in real estate. And now, the data scientist of real estate, George Roberts.
Welcome back, investors, as we head into the second half of 2024. I know that many in the audience are concerned about this unprecedented disconnect between financial markets and fundamentals. And that's why I've brought back our special guest today, Chris Galizio, to discuss developments that we've seen over, I think it's been about a year since we've had you back on the show. We'll certainly be discussing his upcoming movie, Money Game. Actually, we can't even really call it upcoming now because I believe you're already in theaters. Looking forward to. We'll talk about the timeline. So this will provide an entertaining and educational perspective, the impact of runaway printing presses on the real economy and many other things as well. So quick introduction for our illustrious guest. Mr. Galizio has been at the forefront of the investment industry for nearly, I think now maybe over 30 years. For over a decade, he was the portfolio manager for the Fidelity Large Capitalization Growth Assets, which grew from 20 million AUM to over 7 billion during his tenure. After leaving Fidelity in 2017, he started a hedge fund. And by January 2020, he wrote a white paper entitled The $340 Trillion Problem, as it became ever clear that financial markets no longer made sense. He's also the executive producer of the aforementioned Money Game. And we're very happy to have him here at the Foundry. Can't wait to hear what you have to say today. Welcome to the show, Chris.
Thanks, George. It's good to be here.
Right. Well, I'm glad you mentioned Luke Roman. His quote reminds me of Taleb's parable of the turkey, fattest the day before he gets slaughtered.
Right.
So let's talk about that tipping point. So in terms of de-dollarization, or the loss of the dollar as the world's reserve currency, can you say that we're closer to that today than we were, say, a year and a half ago, last time we talked? Or is it like that beach ball where you just you don't know when the crisis is going to pop?
I mean, I don't know when it's going to happen. I just know that this is all completely unsustainable. I would argue the day the U.S. stole Russian reserves is going to go down in history as the equivalent of Bretton Woods, 1944, and when Nixon took us off the gold standard in 1971. Because another quote is, "Pride comes before the fall." Right? So they stole Russian reserves, which then woke up the entire world and said, "Wait a sec, if you can steal their reserves, then you can steal our reserves at any point."
Yeah.
And then it wakes them up and says, "Wait a sec, I need to get my money out of dollars." Here's another quote from Vladimir Lenin, who says, there are decades that nothing happens. Then there are weeks where decades happen. Right? So you're not going to know when it's going to happen. I think it's going to happen quicker than people realize. I think it's 6 to 12 months. But again, I could be wrong, and I have no crystal ball there. But I just see all the wheels are in motion. The BRICS are shifting away. India is supporting Russia. China's on the side of Russia. They're still buying Russian oil. We thought we were going to sanction them into oblivion, and it didn't work. So I think it's going to happen quicker than everyone thinks.
Yeah, it's a sign that the dominance of the dollar is declining, that the sanctions no longer work, and absolutely true. It's not about agreeing with Putin. It's about protecting yourself. These nations, I think, are realizing that they've got to go and do something. We mentioned Petrobras a few minutes back. Very interesting stock, one which I own as well. Nice dividend, super low price earnings ratio. But are you at all worried about the geopolitical concerns, De Silva, for example? Any concerns that maybe there's a little danger? I mean, obviously you can diversify out of a lot of that.
So I mean, I think what people are doing is building narratives that aren't necessarily true to support a price. They're doing the same thing on Amazon, or they're doing the same thing on GameStop, right? They're looking at these companies saying, well, it's 4 times earnings. It's got to be a reason. It's got to be geopolitical or something like that. Their president is now Lulu, right? The last time Lulu was in office, Petrobras was trading at 40. So yes, they might they could do things, and I think they have actually to restrict the
Right. The
dividend.
dividend policy has changed. And I know they're also going towards renewable, which at some point makes sense. They're doing it really quickly, maybe before it makes sense, would be my criticism. Anyway, but back to you, please.
I mean, so yes, they change the dividend policy, but as an investor, it doesn't really change the value, right? I mean, dividend isn't something that changes the value of a company. It changes how much you pay out, right? It actually should grow. It should increase your growth because you're leaving more into the company and growing it. They're not talking about taking it from you. They're just saying, okay, you can't. And government shouldn't be involved, but honestly, governments couldn't be more involved in the U.S. Like we're talking about this as like it's a capitalist society, right? They're manipulating interest rates, right? So which side is actually capitalism, right? The theme of Money Game is capitalism requires risk to allocate scarce resources. So once the Fed stepped into markets, it's not capitalism anymore. That's why GameStop's trading at infinite. That's why Amazon's trading infinite. That's why Boeing is kept up, right? Because they're manipulating markets. And that seems like a small thing to talk about it. And you keep seeing these things. I mean, I actually think it's interesting when you read George Orwell, 1984. I think he predicted all this. I think in some ways I feel like what they're doing is a blueprint of Orwell, because everything seems like a small thing. London is bombing. Maybe even London's bombing us, right? It might seem like a small thing, but when you put it in the context, it's like, wait a sec, our own government is bombing us. Like the governments are manipulating markets. So this is all just a money game. So what am I investing in? You're investing in nothing. You're investing in a cup of coffee. As a matter of fact, my coffee sitting here is worth more than Boeing, right? I mean,
I like it. I've got my little tea here. This is my
more than
segue
Boeing.
to my
Well,
next question.
if you look at Boeing's numbers, you're going to be like, well, they can't cover their interest expense. 25% of the S&P 500 can't cover their interest expense. And they were talking about this like a capitalist system, and then we turn to a country like Brazil, which is capitalist, and say, well, are you concerned about their Lulu getting into power, right? I
Yeah.
would actually argue that they're more capitalist than us. But think about this also: the U.S. is 71% of global markets. We're 3% of the world's population. We're 71%. Why? Because we have the lowest cost of capital in the world,
Mhm.
right? So all our stocks are trading infinite. And by the way, think about it. I mean, if Amazon, which 2 years ago Amazon lost 40 billion, I don't look at earnings, I look at free cash flow, right,
Mhm.
including stock-based comp. So 2 years ago they lost 40 billion. This year they lost 9 billion, and it trades at what, $2 trillion. Compare that to Alibaba, which in three years you'll have all your money back in cash, and then you own the company forever. That doesn't make
Right.
sense. I mean, so if Amazon wanted to buy Alibaba, they could buy it like that. If Exxon wanted to buy Petrobras, they could buy it like that, right?
Yeah.
So if you have the lowest cost of capital, you become the world, right? And take away everyone else's sovereignty. And it's actually worked because now the US 71% of global markets.
So you talked about Lula a moment ago in neighboring Brazil. So as we record this episode, this is just a few days after Argentina's 208th celebration of their Dia de la Independencia. And as you know, one of the great stories of late 2023 was the inauguration of an economist as Argentina's president. Wow, a lot of things going wrong over there. But can anybody, even an economist, save Argentina?
Well, so I think Argentina made a huge mistake. So I feel like they jumped out of the fire and into the frying pan. Because think about it, they're trying to tie first of all, the currency fell by 52% in a day. So your
Mhm.
coffee went from $3 to $6 the next day, right? But they tied themselves to the US dollar. But the US dollar has 125% debt to GDP and can't pay back their interest expense. So I actually think it was a huge mistake to tie it to the dollar. If I were them, I would have tied it to gold. As a matter of fact, if I were them, I might have even jumped into bricks.
Nice, interesting. So for the moment, seems like things have been working. They've taken inflation down quite a bit, but interesting. Frying from the frying pan into the fire.
Right.
Right. So, Chris, we were talking about Zim off air. Really interesting shipper, Israeli shipper. They rent and own container ships. You mentioning they have currently a price earnings around one. So tell our listeners and viewers, like, what does that really mean to you when you see a price earnings of one on a stock like that?
I mean, it's so interesting to watch. On the one hand, you have companies trading at 400 times earnings, Square trading at 1,500 times earnings. You're going to get your money back in 1,500 years. And then you look at a company like Zim, which in 2021 earned 4.5 billion, in 2022 earned 4.5 billion, because pricing of shipping was high coming off of COVID, right? So shipping prices were really high. Then shipping prices fell. Now shipping prices are back to 3,500, which is it's up 300% over the last 12 months. So it's obvious earnings are going to be really strong again. Stocks trading at 2 billion, right? So it's just, to me, it's evidence that markets don't read the news. The ecosystem changed.
Right.
It's all passive and quant. Nobody's thinking anymore. But you can see they're on the path to earn. I mean, if they earned 4.5 billion in a year in 2021 and 2022, then with prices back to where they were then, I can't imagine they're not going to earn 2, 3, 4 billion, and it trades at 2, and they don't have a lot of debt. So it just to me, it's
Right.
just proof that markets don't read the news anymore, which is a big
Yeah.
topic. And that's why I kind of decided to make the movie as a portfolio manager and a hedge fund manager. I started to notice that nothing makes sense. It's because the ecosystem's broken. It's because the Fed's been manipulating markets for so long that now nothing makes sense. And we're still talking about a system that everyone believes is efficient. Imagine brilliant economists from the University of Chicago using price movement from a manipulated market to measure efficiency, and not the system's impact on the real economy. By the way, so the real economy, you notice that productivity is hitting a 75-year low. Why? Because we're sending trillions into companies that don't make sense. We're sending trillions into Amazon and Tesla and GameStop, and who are the real geniuses in the markets today? Today, the biggest genius in the market is Roaring Kitty, who doesn't use fundamentals. Isn't it amazing? It's comical what you watch, and then you'll have them come on CNBC because their track record is so good, right? Oh my God, let's talk about someone who doesn't use fundamentals, but got GameStop right. This is the point of the movie. Capitalism requires risk. Roaring Kitty has to buy GameStop and lose all of his money, and then people will learn over time. Listen, maybe I shouldn't be listening to Roaring Kitty. But he's the guy they're bringing out on CNBC talking about, because they still believe markets are efficient. Isn't that amazing?
Great. So just to frame that, as you mentioned earlier, yet again, people are saying Warren Buffett has lost his touch
Right.
because every time the markets get crazy, those that invest on fundamentals, they lag. But then what happens when the markets crash? Then you see people like Buffett right back out on top again. And it's just crazy how many times we've seen the story, but people don't seem to
Well,
get it.
I think Warren Buffett's an interesting case, because that's why we say the most underused books in finance are history books, right? Warren Buffett has $193 billion sitting in cash during a
Mhm.
sovereign debt crisis. He's never lived through a sovereign debt crisis. So he's 93 years old, and took all of his money, he saves all that money and put it in cash. What happens to the value of cash if the currency collapses? It goes to zero. The government defaults on its debt, it goes to zero. The debt goes to zero, right? So that's why we use history books, because they predate us. They don't just predate me and you, they predate Warren Buffett. He's the smartest
Mhm.
investor of all time, and he's sitting there with $193 billion in cash during a sovereign debt crisis. By the way, the movies keep getting bigger, right? And the crises keep getting bigger. 1998, we had the tech crisis. 2008, we had the financial crisis, and here we are in 2024 in a sovereign debt crisis. We talked about for the movie a couple of our taglines. The tagline for the movie is "Don't get played," because you're not investing in these companies; you're providing the financing. But another tagline we could have used was "The buck stops here," because you can only kick the can down the road until it's the government itself that has the risk. One of the quotes I wanted in the movie, we didn't actually get it in the movie, but one of the quotes I wanted is, "When the government assumes all the risk, it's the currency that's at risk." It reminds me of a scene from Superman. Lois falls out the window. Superman dives down and saves her and says, "I've got you." And Lois says, "But who has you?" In other words, what are you backed by? The government isn't backed by anything anymore, right? So they're going to have to continue to print money. And so now you're in the buck. That's why the tagline of the buck stops here would have been a great tagline. Another one that would have been a great tagline is money's not real. By the way, it's in the movie. They turn to CNBC, basically the CNBC reporter, and he says, if I had taken all my money and put it in Bitcoin a few short years ago, I'd be a billionaire right now. Oh well, money's not real anyway. So we do have
Yeah.
that movie.
Well, speaking of money not being real and not being backed by anything, a couple of quick ones here. Take a look at what's happened to the dollar since going off of the gold standard. Just unbelievable, and just unbelievable. And that's just the start of it. A couple other things you mentioned. So Jack Bogle, a serious hero to people, investors everywhere. You need the opportunity to invest passively. Not everybody is a lion, and it's great that we have this opportunity to invest in indices. But now we got way too much. So, do you want to update us? Help us quantify how much of the stock market is on autopilot. And this is an old article. This is back from 2019. How much is on autopilot? And then when you have the quants following all of this passive investing, how much is really on autopilot?
So these trends are even getting bigger and bigger. So this is an article from 2019. So here we are 5 years later, and just look at markets. I mean, so in terms of things have gotten crazier and crazier and crazier, right? The more companies that lose money, the more they go up in price. So now I think if you update this, it's probably 85 or 87% of the market is passive and quant because there's no humans left in markets because humans like Buffett, like any of these brilliant investors are gone because they would have looked at the deli in New Jersey trading at $10 million and said, why would I buy that? They would have looked at Carvana and say, why would I buy a company that's losing money or GameStop's losing money? But notice just the system has shifted to passive and quant. What Professor Gardner says, he says no one picks their own stocks anymore. The lions, active managers, have been eaten. It's a bunch of followers following followers like a cat chasing its tail. And people are still believing that markets are efficient. But all that's happening is when one stock goes up, he says it in the movie. We talked about the Reddit guys talking about GameStop. The Reddit guys finally figured out how to trigger the stampede of algorithms. Just aggregate a bunch of buyers. It's like waving a red flag in front of a bull. And if you think about it, what Reddit was doing is they got 50,000 buyers of GameStop. All of a sudden, all the quants are seeing buy, and they say, oh my God, the smart money must be buying GameStop. There's got to be a story on GameStop, and all of a sudden, 25% of the market, as you point out here, runs to it and pushes it from 400 billion to 20 billion. And people are saying it's people doing that. It can't be people. It reminds me of that. There's I think it's a Mercedes-Benz commercial, and they have a little 5-year-old kid, and he's got his fingers out, and he's trying to get the car to bleep, and his father goes behind him and goes bleep bleep, and all of a sudden the kid goes like as if he did it, like he was dressed as a Star Wars character, and all of a sudden it bleeps, and he thinks he did it, but it wasn't him that did it. It was the quants, right? He's not Darth Vader. So it was the quants, and people believing they're the one, even Roaring Kitty believing that he's pushing it up. All he's doing is triggering the stampede, and then all of a sudden the quants are buying it because they're seeing all these algorithms, the algorithms buying it. All you got to do is trigger the stampede of algorithms, and stocks pop like crazy.
Right. I made a sort of a cryptic comment earlier about it was almost 40 years ago that we saw something similar, markets crashing because of computers talking about portfolio insurance, essentially forced selling, which is exactly what would happen if our market did decline. And after 26 some percent over the last year, I think people are going to be pretty skittish if they see those gains, which they believe are very real, if those gains start to evaporate.
100%. And actually, there was the head of the SEC. His name escapes me, but he was talking about how the entire system now is based on one trading platform. It's on BlackRock's Aladdin. Think about it. You've got BlackRock has, I don't know how many, $12 trillion, 17 trillion, whatever that number is. Vanguard has that a huge amount of money. State Street, capitalism is millions of independent thinkers, right? And here we have one system running the entire thing. And he said, if that system is wrong, Now what do we have? Think about it. It actually makes my case that you're no longer living in a capitalist system. You're living in a centrally planned economy, right? Capitalism benefits everyone, right? But we're seeing a system which is only benefiting the rich because it's the entire system is misallocating resources now, right? We're pouring trillions into companies that lose money. And that is a really, really, really big topic.
Right, yeah, huge point. And I'd love to just show this graphic really quickly. U.S. government expenditures as a share of GDP.
Right.
Just crazy. You talk about how we don't really have a capitalistic economy anymore. And I mean, look at this. During COVID, 54% of the economy was government spending.
Right.
And we're not terribly far below that right now. So anyway, your thoughts?
I mean, there's so much to think about there. 44% of GDP is government spending. As a matter of fact, when you see the jobs report, 108%, I think it was, of all jobs that were created were in the government. So government's growing, but the only part of the economy that is growing, private jobs are declining, right? And they're telling you you're living in a capitalist society. I mean, just look at that chart. There's no way we're living in a sixty. Not only is the entire economy government, but also they're manipulating interest rates. So in some ways, companies themselves, which should have gone to zero, never did, right?
Mm-hmm.
And by the way, everyone's waiting for the one of the quotes I use is everyone was waiting for the next Michael Jordan on the basketball court, but he was walking up the fairway, right? Everyone's waiting for the next stock market crash, but the stock market's not going to crash. It's going to be the currency that crashes, right? Which, by the way, sends stocks up, and that's what you're watching. That's why stocks were up 26% last year. It wasn't because they were efficient. It's because the currency is falling, right? It's
Right.
because the dollar is falling, and it's not just the dollar. It's all G7 currencies are falling. And by the way, look at how they're falling versus gold or versus silver. What was it 3 years ago? The price of silver was $13. Now it's 31. Right? Gold was at 1,100. Now it's at 2,400. So the currencies are falling right across the board versus real assets. The shocking thing to me is the real asset stocks aren't going up because markets don't read the news anymore. Right? That's
Right.
why.
You're talking about commodities versus the S&P 500, I think is one measure or metric of that.
I mean, think about it. That should be the best performing sector in the market, but it's tech. Tech's outperforming everything else, right? Shouldn't it be that
Right.
during an inflationary environment, as oil prices 83, right? So commodity copper is at 415 or whatever it is. All those prices are up, but their stocks aren't up that much. And it's
Right.
actually surprising during inflation because the market don't read the news anymore. The scoreboard's broken, right? The Fed is one of the quotes from the movie. The Fed's supposed to be like a referee in a football game. No one's supposed to notice them, but now they flipped the field 90 degrees and broke the scoreboard. I literally believe the scoreboard is completely broken. Once you understand the scoreboard, think about it. All the players are no longer scoring. Like I talked about AMD, right? AMD's had a revenue growth of -8%. GameStop had negative 37% growth, right? The players are no longer scoring, but everyone's still looking at the score. Everyone's got their eyes glued on the scoreboard, and they haven't noticed that players aren't scoring anymore.
Mm-hmm.
It's just a fascinating point in time.
Yeah, absolutely, absolutely. Well, look, I think we have to draw this to a close, and you made many references to Germany, but just to make that a little more explicit, we saw some huge money printing, rampant inflation as a result of it, and a very bad ending to the story. But I think what you're trying to do here with Money Game is hopefully that we may be making some of the same monetary mistakes. Hopefully, though, if we understand what's going on, what's going right in our economy right now isn't really capitalism. What's about to go wrong when it does go wrong, we always know there's always going to be a recession around the corner. We just don't know when. That's not capitalism either. So what are you hoping we can do this time that'll be different when people see the economy hit the fan? What are we hopefully supposed to gather as a lesson from that? And how should we react? What can we do differently?
I mean, I think it's interesting you talk about recessions because the recessions have become fewer and further mean, they just haven't happened, right? We just haven't had a recession for, I don't know how many years, 15, 20 years, whatever that is. It's been forever. Why? Because they're not allowing a nominal recession. If there was ever a nominal recession, or a real recession, tax receipts would fall, right? So every time there's a problem with the bond market, they're stepping in. And so you're seeing there's fewer and fewer and fewer recessions. There used to be recessions all the time. Now you don't see them. And so at the end of the day, when you manage an economy like that, eventually it's the currency that's at risk. And so I think, and that's what you're watching, right? So if people are all looking and saying the stock market was up 26% last year, look at that. Look how great that is. That's actually a sign that the ecosystem is broken. If the price of stocks go up every single year, it's kind of like looking out your window and seeing gazelle everywhere going, oh my God, look at the gazelle, the ecosystem's flourishing. No, it means there's no lions left, right? It means the ecosystem's broken. By the way,
yeah, absolutely. And we're going to get a chart up of the number of recessions, another months in recession over 30-year periods. And you can see before the Fed, that months in recession was very high, although these recessions, they tended to be very short. And we did have banking crises, et cetera. But the severity has absolutely exploded. Hard to say what's going to happen next. We didn't have a Great Depression until after the Fed. We didn't have a Great Recession until already almost 90 years after the founding of the Fed, and then things got a little worse. I'm sorry, the worst, I should say, since the Great Depression. But anyway, yeah, hopefully we'll take a lot of important lessons away from this, and we can write a different ending to this economic story. Well, anyway, I want to thank you so much, Chris. You're really doing a lot to enlighten, inform, and entertain people today, and hopefully for the coming years in this movie Money Game. And with any hopes or with any likelihood, we will be able to write that better story. So I want to thank you very much for taking the time to share your knowledge and experience with our audience. Thank you, Chris.
Anytime, George. Happy to be here. Thanks. I'll do it anytime.
Pleasure. All right, I'll take you up on that.
It's good. It's all good.